If a stock is about to split, you may be wondering, is it better to buy stock before or wait until after the split? So in this video, we will use Walmart stock as a real example to answer this question, since it just split yesterday, February 26, in a 3-for-1 stock split. In case you don't know, this means for every one stock share you have of Walmart, you get 3 shares. Now you may think that's good since you have more shares now, but the catch is that the share price also gets cut down by a third. So the value of the stock position is actually the same, unchanged, no gain or loss. So how does this really help us? Well, analyzing the trades of wealthy investors becomes a little easier during a stock split. If you've been following this channel, you know that we follow the trades of wealthy investors because as they get richer on Wall Street, we can also make more money too. In fact, we followed wealthy investors who were buying Walmart last month on January 10th, on this day. And we shared our trade with our members in this video. Okay, this was a members only video. You can see that this was shared with them on January 10th, where we analyzed a $51 million trade. This was clearly a wealthy investor that was going bullish long. Okay, so if you are interested in the trades of wealthy investors, encourage you to go to our website to learn more on how you can gain access to the trades that we shared with our members. Put a link at the top here. So to be profitable from the trades of wealthy investors, we need to make sure we can understand the data of their trades. And one of the ways we do this is by comparing today's volume of options contracts versus the previous day's number of contracts that are still open. And what's great about waiting until after a stock split is that the open interest gets reset to 0, making our analysis easier because we now know that all the trades on the day after the split are all opening trades. So you can see here the volume much greater than 0. So we know these are all opening trades. If we look at the day before the split, you can see that this is after the split because Walmart is $59 on February 26. If we look at February 25, you can see Walmart is $175. That's before the split. And before the split, we can also see the open interest is not 0, right? You can see thousands. So this complicates the data analysis. And that is why it's easier to analyze the data after the split. Okay? So what is going on with Walmart after the split? Let's take a look on the data. So you can see here on February 26, there was 3,000 contracts being traded for the April 19th 61.67 strike calls, right? And we can then see also there was also another 1,800 being traded, but this one looks like they were selling them, right? And that's why it was being executed towards the bid, while this trade looks like it's being bought, being executed at the ask. So that is another issue where you analyze the data that could complicate things. And that is why it cannot only rely on the open interest and volume, because you don't exactly know, is this trade buying or selling to open? We know they're opening, that's for sure, but do we know they're buying to open, or selling to open, right? So that is very important, because if they sell those calls, they're not necessarily very bullish on that. Okay, selling a call does not mean that you're very bullish. It could be a mildly bullish, or it could be a neutral to bearish. You can see here that at the 61.67 strike here, we are in the position because we believe there is slightly a greater probability that it is a buying trade. All right. And so that is why we are also in this trade. You can see that they paid about $42 per trade on this. And so we simply follow the trade just because this is not such a very high probability trade, just because of what we just discussed, that these could have also been sold to open. Okay. And by buying to open, you can see that this is a very bullish trade where it would be profitable if Walmart continues to go up. But if they were selling the trade, you can see that it is not a bullish trade anymore. In fact, if it goes up too much, it is a loss. So this is more of a short position, right? But it is also mildly bullish, because Walmart can actually increase to about $62, and this trade would still be profitable. You can see the blue line is still above zero here at expiration. Okay, so this is why it's very important to know whether or not these are buying or selling as well. So keep in mind, this open interest is resetting to zero after a stock split is just one variable we analyze out of the many others to help us find out how the wealthy investors are trading, whether they're buying or selling. And so if you want to learn more about our analysis work to increase your probability of profits, go to our website. We'll put a link here, and let us know in the comments below what you think will happen to Walmart and what you think about stock splits. Do you think it's better to buy before or after stock splits? Take care and have a wonderful day.